38. Moccasin employment rates, the Moxes say the system breaks. The right side said it's because trade, the left side blames the word that said the Russians in the election.
All right, ladies and gentlemen, I got your watch list coming into August 1st, 2019, and boy, were investors surprised today despite getting everything they wanted. And even with us being wrong, I was so off on my Powell prediction. I'm burning my Jerome Powell shirt, but even then, the play we talked about yesterday just it blew my mind. And there's something that happened that we haven't seen. One, the Fed cut rates, and that was the first time in over a decade. But now a few other things that have not happened since Brexit and even the election of Trump have occurred, and the bond market saying something. There was crazy moves, and regardless, investors were shocked. Even Donald Trump, shortly after market, he came out, and here is the quote. What the market wanted to hear from Powell. I can't do a Trump voice. What the market wanted to hear from Jay Powell and the Federal Reserve was that this was a beginning of a lengthy and aggressive rate cutting cycle, which would keep pace with China, the European Union, and other countries around the world. As usual, Powell let us down, but at least he's ending quantitative tightening, which shouldn't have started in the first place. No inflation. We are winning anyway, but I'm certainly not getting much help from the Federal Reserve. So we're going to talk about everything that went down. We're going to, you can see this account. It's surprisingly, we'll talk about how literally I didn't make any moves on this. This is what we talked about on stream. I made $40, and this account is heavily invested, hence the negative buying power because of Apple. We're going to talk about some of the other stuff we saw with gold and all that. I want to go over the play that we made with TLT and seeing how we're going to keep watching that. I got the notes that I took during the meeting. So these were notes and we played everything live. Then your keys for tomorrow, and then moving on to even more future analysis of what we're going to be looking here for the Fed. And again, we got some awesome plays that we still need to go over because now is the time to get ready. But we're going to need more confirmation. We're going to talk about that. So hopefully you guys got to learn something. This is history in the making. I love you all. You know what you need to do. Post your watch list below. Tell us what stocks you're looking at. If you got a game plan, post it. Drop your thumbs up on the video and make sure you're on the streaming channel, youtube.com/the stock market. We are live Monday through Friday, 30 minutes before open. It's pinned in the comments in the description. I'll see you there tomorrow. So where should we start? Let's talk about the Fed and what happened. Here's yesterday's watch list. Hopefully you guys watched that. If not, go back and see this. I was wrong. That's a great place to start. I thought Powell was gonna do the right thing, but he caved. But again, here's the best part about all of this. This is all about future pricing now. What we got today is literally changed the course for the next even 12 to 18 months, and now we know better how to read everything going on. That's what I'm more excited about than anything. And I'm sure Powell is too, because he was able to give a clear signal now, or we were able to see how everything played out and we know how it is. But here is that play that we were talking about with the TLT. So we talked about this yesterday. Again, we're in the September ones and how that even relates. Even the September plays we are in, there is not going to be a Fed meeting in August, but we are going to get one in September, and those contracts will still cover that. But now the key was all of these different scenarios, because like I asked for your guys' input on it. So there was the if they cut small, if they cut big, if they do not cut, which is what I was on. But at the end of the day, they cut small. Bonds will go down because people will anticipate future cuts or recessions, so they will grab yields while they're still high. And now here's the key for today, or even just what occurred and what you call this. Did the Fed cut rates? Yes. Why is Donald Trump mad? I thought that's what he wanted. And people say Powell caved. And again, I'm not renewing my subscription for Powell. I'm no longer a fanboy. But what he did today and what the big difference is, the market wanted a big rate cut. And although he cut rates, you're even going to start seeing the media word this. And again, this is what he focused on. He called it, or he said he's thinking of it, as a mid-cycle adjustment to policy, as opposed to we're cutting rates for this. And again, we're going to talk. I have all the notes on that. And I forgot to even tell you, I'm posting this early because, well, the theme of even tomorrow, we don't even, I said wait, and we were talking about this. I'll stream most likely here around 7 or 8 o'clock tonight on the live streaming channel, and we could go over some of this stuff. But this is where it diverges from Trump in saying in general, Trump is mad he didn't get his cuts. They're saying this is a policy adjustment versus acknowledging that, okay, there's something wrong with the economy or this. And again, that's where people talked. He said it's kind of an insurance plan. he was 50-50. But really where the market started to go down, I think it'll be helpful to pull up the notes here. The main thing he started to say, this was when it first came out, and really when his speech started, these were the planned statements, the prepared statements that he had. He said the runoff of securities and quantitative tightening, it is now ending quantitative tightening. They're not selling off their balance sheet anymore. I think that means they're going to be able to buy back it with that, even with the bond program. They referenced to global concerns, and that seems to be the main reason that they were saying. And he recognized all this stuff with asset inflation and all that, but everything he was saying regarding to inflation and seeing these effects muted was regarding the strong dollar. And here's the irony with all of that: despite rate cuts, the dollar surged and went up, which is why just investors are truly baffled by this. Even some of the media I'm seeing are all the posts and news. And even as it relates to TLT, this is one of the things. Again, this was the first cut in over a decade, but now the one thing that really caught my eye, and now it even makes my play a lot stronger coming into the next few weeks. And again, everything from now on is watching the future value. And that's where, again, if you guys are thinking about that, you'll be able to profit off this. But the 2-year and 30-year, the spread widening, this was the most in one day that we've seen since Brexit or prior to Trump being elected, where even the futures dropped that much. And again, in both of those instances, we saw big drops in the bond rates before they ended up reversing pretty heavy as well, too. But here are some of the quotes that we had there. That's weird. Where did that come from? That's pretty dope. But he said it's not about the cut, but more so the actions over the year. He said it's somewhat accommodative. And then again, he was 50-50 when Leisman from CNBC asked him about the insurance question, and his response was weird. And then this is where the market started to drop, because he started saying the future path is still uncertain. It's hawkish. He didn't say it was hawkish, but it was interpreted as hawkish, because now this is not what investors wanted. They didn't get the big enough cut, and they were hoping to get more clarity on what is going on with the Fed and what they plan to do. He said this is just a policy adjustment, which is pretty much admitting they made a mistake and they did tighten too fast. But there was a lot of lack of clarity in the future path. And the issue was, too, when the announcement came out, there was dissenting members who didn't agree, and people were expecting no dissents. People didn't want any dissents so that it could show, hey, everybody in the Fed is on board with this rate cut cycle. And then there was actually 2 instead of the original 1 that other people were identifying. And then every time he was asked these questions, the SPY kept dropping. Every single time there was a lack of clarity on this future plans. And then even then, his stance stayed the same with everything, but they cut. It sounded like the exact same Powell. He even at one point, it was crazy. He even said, we might even raise rates. And he said in the market really, really liked it. When the market started to bounce, it's because he said, usually, someone asked the question and he responded and said, usually when the Fed cuts, historically, they keep cutting, and it usually is the start of a cutting cycle. And he said that's not the case. He said he said pretty much, we're going to respond as need be. We'll use all our tools. But then he said, well, we could even raise rates. And that's where that came about. And that's why the markets were, it was very, very weird. But he did say, with what it is and how they're going to respond, what I got from that was also known as, we will always follow the futures. I thought he would upset the futures and go with the economics and the underlying economics. He did the opposite. He went for the cut, but he honored that same 40-year tradition with what the futures pricing was putting in. And I guess that was probably the lesser of two evils here. And that's where he said, they will usually continue. But he was like, just because I said that doesn't mean that I'm saying we're going to cut more. And this part even got me. He said the cut is to support the expansion, and they don't know if it works yet. And that, because they were even asking, well, will he have enough tools to cut if there was a slowdown? He's saying we don't know, and that's where the whole slight hint at even raising came out. But he even said this clearly, and now this is the final thing I learned from it. He said it was well telegraphed what we were going to do. But what I got from that was that it was more evidence to following the futures, and I think that was his signal there right there, that he's saying, hey, when it gets tricky, when it gets tough like this, he said it's not the political pressure, I think, and that's the next dilemma is, what what happens when the futures price something different than what Trump says, then we'll find the truth out about this statement. But that is what occurred today, and this is now why the markets are going crazy off of this. And again, this doesn't mean that there's going to be a crash. Honestly, we are susceptible to both. What can happen either way? And now this is going to lead to the keys for tomorrow. Let's make it big and bold for you. I'm expecting to look for something similar to how we close today. Starting from here, really, where I think it's just going to look like this, where we're going to gap down, rip up, and then close just pretty much above where we opened at, or where we gap down, but still kind of up. And then if it closes below the bottom, that will be really, really bad. Now, if that doesn't happen, I'm going to be looking for a sell the rip type event where the market either stays up, it could cuck for one day and just stay the same, or we might even see it rip up and then look for a sell of the rip. But their volatility is back, and that's what we want. I told people before this morning, I said, let both seeds grow at the same time, both the good and the bad, and wait until you know which is which and cut them, and cut the bad and keep the good. We still do not know. Again, that option premium right after the report came out, both calls and puts ended up 50%. I saw options that were out of the money, went in the money, and they were still down. I didn't make after, I'm very calm about this. And again, too, this is where it is. This account, Amazon's giving me money back. I had old positions, again, with time setting up that were working with me. Those TLTs, they went up overall about 40%. And again, that's assuming that's the mark. But the last trades, they stayed up about 100%, and that's what we'll talk about. But I made $40, and again, that's even after losing 1,300 on Apple. I'm very, very calm about all this. I'm just gonna let it come to us, and that is gonna be the key. But I'm telling you, the key here is to wait, and again, let there be more certainty that it's uncertain. Let some more blood come in the streets and take advantage of it. Get ready to move, but not yet. We need the prices to be appropriate and cheap, as well as near a reasonable strike. That they have to be there. Otherwise, you are going to be paying for uncertainty and funding the market makers' insurance. That's what they do. They widen the spreads, and they're going to make it there. If you want to be the one to pay for it immediately after, think about it. If you get in a car accident, your insurance premium goes up afterwards. After enough time goes by, it goes from your record, and your premiums will come cheaper. Even we made a play. This is what I'm going to watch on tomorrow, and I think this is going to be a big play tomorrow. Boeing, even the premium, and we sold out. We cashed out 400% on Monday. The stock is at that same crucial level around 340, but the options in those weeklies now coming into this week and next week, they're down 80%. So it's the same concept here where I'm telling you guys, just wait and be patient. If the opportunity comes tomorrow, we'll take it. If it's not there, again, the prices have to be there, as well as being near the money, and we have to have the potential for the stocks to move. So moving on, the TLT, it's the play of the month now, because even comparing this to June 2016, that is the last time we saw the Brexit. Let's zoom in here. This was coming into Brexit. The bonds ran up kind of like we saw. They sold off, and then here's the key to notice. That was the day of Brexit. So when the market was dropping, this is what happened to the yields. They kind of moved in tandem, but then the next day they gapped, and then it continued. And that took about from 623 to 78. So about 12 trading sessions. But now that's where we have to be cautious for. And this is what I'm saying on those. Those plays are going to take time to develop, and thank God we had those September ones. But the shorter terms are going to be crazy. They're going to whipsaw. So if you want to be a sicko and play that, that will be the opportunity. And if there is cucking going on and it's hard to find plays, TLT could be a very, very simple one, but you have to understand it's a slow mover. Don't get caught too far out of the money, and don't get caught paying IV on these ETF indexes during these volatile moves, because those become even the most high-priced items. So I'm still in that, and that's going to be the key to watch. It's going to be watching bonds, watching how the dollar reacts, but ultimately, I think the logic here and what happened, it still remains. So these are the plays I'm going to be watching, and honestly, if it does come down and I start to notice issues with the pricing, this is going to be the play. I might start rotating a lot of money into here. And again, not instantly, but when the time is right. These are what I want to watch. That's why I need to have me some more data or time to confirm it, because again, it's better to be late than wrong, and that's what I want to see. So hopefully that helps. Hopefully you guys are ready. Let's get into the plays now. Right off the bat, we could take a look at Apple. I want to look at these tomorrow morning. I'm still in that play. We're going to see how those go, but the fact it fell out, it's kind of looking like Facebook, like people thought. I want to see if this thing holds up and how it just plays in reference to everything and what we're seeing. But again, even what we talked about today, I told you guys, watch financial products. Actually, we had it right here. Banks and financial products first, then values, then growth next. And this is what you could see with this SPY. Let's overlay it. You saw banks. Banks went up, then banks led them. Banks were the first to react. Then banks were the first to bounce when everything was going. It was banks first. Then take a look at your value stocks. Then it was the value stocks next. They dropped first. Market was kind of coming down. They went up, and then they went. And then lastly, it was your growth stocks, your Amazon and stuff like that. And I'm using those three companies as examples. Hopefully you could understand the point. But that was across the board, even if you threw up the ETFs for those industries. Same thing is going to persist, and that's what we're going to be looking for. And those are some of the plays. So that's why I'm watching Apple and even Amazon. I have that one play with it. And now here's the thing. If Amazon gets one more bad day tomorrow, even today, this is one of those I'm waiting for the timing. Even some of you small accounts, you may not believe it. You're going to be able to get a great opportunity on Amazon. Those are the ones I'm really waiting for. I've made a lot of money on those in my life, and that's what I like them. But again, the price has to be right the price of the option has to be right with an appropriate strike price that could still meet. So I'm going to be watching Apple. I'm going to be watching Crowd. That's, again, I said I want to buy back in. It sold off. We had a good sell on that, and I'm going to wait to see again with this same logic how it plays out. But we also want to see in the same nature, Crowd, Roku, any of those, you want to see what does not agree with the market or what starts to do its own thing, or if you see a rotation into any aspects. Then I'm going to watch Shopify pre-earnings because this is a big growth stock. I want to see how they report, but what they do will give us more insight now into how to play these future earnings. I'm not covering any of the other earnings right now because I need more data, and this Shopify is going to tell us a lot, and it's going to be a good play regardless. So even if it does go up, it could sell off or vice versa. So I'm going to keep my eye out for that. I'm going to watch UPS. You could probably put this in line. It's trading like the value stocks, but again, it's transports as well. But they did good. They didn't go down as much. So I want to see if this one, usually the transports, when they could have a push-pull reaction. So that's what I'm going to be looking for. If the SPY goes down or up, I want to know what transports do. And UPS has been in its own mode lately, doing its own thing. Then I'm going to watch Starbucks. This one, I'm waiting for my entry to get back into calls again. At the beginning of the week, even though we sold out after the earnings, I'm waiting for my continuation play. I still think it exists. I love how it would hold down some of these levels. It did sell off big, but this is going to be the one I'm going to look to hedge myself with if I do want to get calls besides TLT or anything else. I am going to be going for Starbucks. So if you guys see anything, call that out. Boeing, I think, has the potential to die. The whole reaction, it just dropped. It stayed down. It showed no loyalty to any industry or anything. It was weird. They had an FAA meeting today or something along those lines. But I'm going to wait. I do think there could be an opportunity, but Boeing is very, 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 very good at slowing itself down. And that is why I got the weekly on there. We grabbed these today, and somebody, man, shout out Mike Tyson, baby. That's his name on the YouTube chat. It's not actually Mike Tyson with face tattoos. Please read all disclaimers. None of this is a recommendation to trade anything. Please consult with a financial advisor. If you're listening to a random guy on YouTube who does not show his face, you're probably making a bad financial decision. We're live Monday through Friday, 30 minutes before open. The Colt loves you. Please be respectful and positive. Thank you. But we got these 327s, and it's funny. They closed at the same price. They did go up almost double. We got them around 7. I got fat fingered at 17 cents there in the morning because hashtag Robinhood. Then they came down, and then again, Mike Tyson came in and he used the stream alerts. Or if you're on the stream, like I said, document some of the trades I make and wait till they become cheaper. Wait till I lose on them and then take advantage of it, or try to get something closer to the money. And that's what you could have done with these. That's why these actually ended up higher. I could have ended up in that, and that's why if I was a little bit more patient, I could have waited and got that for $15 and then boom. But even then, I'm going to be looking at these, and these are the ones we got. We got them at 17 cents. We're going to see how they play out, but I'm going to start. Given the slowness, I think Boeing it's starting to show weakness around that level. We'll see what happens. I'm going to look to get a little bit more time again. Even these held up a little bit of value, but they still were cheaper. So keep your eye out for that. I still really, really like the Boeing. And then Qualcomm. Qualcomm had bad earnings. They cut guidance. The key with them, you guys, it's coming back to this first pop. Once it breaks below 70, it could start moving in a big range, and it's been coiled up, not moving. So if this starts to go, it was expecting about a 3-4% move on earnings. It's just outside of that. So we'll see. This could be one of those good ones to play on the options there right in the morning. And that is pretty much it on that level. Watch UNH. That's what we lost on. And watch, but again, this could make moves. I'm even going to be looking for the put side now tomorrow too, but see how this moves and how this picks up. I don't think the play is over, and keep your eye on it just in general, how healthcare responds to all of these events. It's going to give you a good insight. And hopefully you see how we have our eyes on all these different industries and how we want to take advantage of them. It's about spotting the winners and losers and which ones are the real winners and the real losers. And then Beyond Meat, they did great today, surprisingly. But then they started falling out of nowhere towards after hours. And now, again, I don't know if the news came out. I'd want to check, but it's what happens with their offering. You know, that other offering they added, we want to see at what price it gets completed. And that is what's going to give us the most detail and information. It's a positive or a negative piece of news. So watch that. And then lastly, this play, shout out Mr. Hits again. If you were there, we literally caught the news within seconds. No exaggeration. Just go see the timestamp. Go look on the stream. Go look at the stream alerts. And now it was a wild play because it was easy to get fat fingered, especially, again, you guys, we've talked about what happens with demand, and that is what occurred. But the news was that there's board issues going on with Nordstrom, and it has to do with the falling share price. So the main family owning Nordstrom's, they are planning to essentially go private, and this is all a rumor and speculation. This is the third rumor in probably the last 6 months, but this one kind of makes the most sense. The volume was one of the biggest, and then as you guys see, the volume came in as if it was literally earnings, and the best part too, it held up throughout this. And if you guys remember Qualcomm, we had something similar. The earnings was about bigger than when they had some of that rumor with it was like a slight rumor with what happened. The volume went crazy, and then the next day it had that move. We made a lot of money on that. We went for, and that's the key. And again, I'm not saying this to say, we're gonna make a lot of money, everybody go buy it. No, there is a factor though to take advantage of with volatility here. When that news came out, it was crazy. I got the weekly just to get my hand in the cookie jar, and I want to sell out of this thing as soon as possible. I ended up holding it. The spreads were crazy. But then the Septembers, this was the play, and guess what? They're still at the lower price. I paid $60 for one of them, but then I also bought two of them at 41 cents. But I got them at 41 cents literally during the candle. I think I got them at 49 cents, 41 or 49. But either way, it still was not that expensive considering the time. But it's only not expensive, and this is a decent contract if and only if it stays up and holds this value. But I like the time aspect of it, and that's the key. But I got that one at 60 cents, and it dropped. So what I did also, I averaged down and I got this 38 for, I think I got it at 15 cents to get a shorter duration again, and these would move up faster considering it's $2 closer to the money. But every dollar is very, very important when it comes to Nordstrom's. But that's the rumor. That's the play. We're going to watch it. It held up nice. The volume's good. But like I'm saying, get more time on that if anything. I want to see how that plays out tomorrow, and I'll probably add to it. But I'm only going to add to it if I could get it at a cheaper price than what I paid. So if it goes against us, but again, give it time, and these are stuff you want to see. And the fact that we have it, again, we haven't had any confirmation or anything on it, that's even a positive sign so far. So watch that. I said Amazon. Next one is McDonald's. I really want to keep an eye on. Again, it's going to have to follow in line with the market, and I'm going to be watching those. I want the 212.15s after it falls out of 210, or even the 210s if it falls below there, but they have to get cheap enough. So we got to push those to the wall and let those get cheaper. And then gold, GLD, I'm waiting for that to get a little cheaper, but the premiums were high, not close to the money. And this was probably a good example of what I'm saying with where you have to wait, because gold would have been a good play. And if you guys remember, I said gold could even go down on this move, and that's what happened. And that's the thing. If you see bonds go down, gold go down, and everything go down, that's where it becomes worrisome. And again, if what I am expecting plays out tomorrow, and then if it does sell off below any gap and go even lower, the key you want to see is if the dollar sells off. If everything's going down, including the dollar, that's when things get bad. So I'm going to leave it there. Make sure you post your watch list. Make sure I see you on stream tonight and in the morning, and let's go!